Good morning, futures traders. I'm reaching out on Monday morning, the 14th of November. Last time I was on, we were in this little wedge in here, and I think I spoke about obviously there was going to be a breakout one way or the other, and pretty interesting how, yet again, we came to a significantly important location that was pretty much going to roll over and get crushed. And lo and behold, they came out with a modest improvement in inflation, and I use the word modest because this reaction is a bit much. But people are excited. They think it's a trend. I'd be really careful about this. I think, like I spoke about this earlier in my past two videos, was you're at the end of the year. You know, it's an opportunity to mark this thing up and maybe regain some of the profits or build up those portfolios a little bit that took so much damage at in and around September, October, and I marked these two spots, and this happened obviously on Friday morning, and there was a Thursday morning, and same thing happened here at this level right down in here, which is in the 4660 area. And this was coming off two down days. It was on its way back down, and it stopped on a dime, just like it did here. And it shot up. This was this markup was just before the last FOMC, which came out with 75 basis point, and wallow, we went back down, and then we digested into this little wedge, and we hit the absolute bottom of it at the morning, right before the number, and within minutes it was all the way up here. And I'm going to come back to this because this is a big deal right here. And that's why I'm saying, in terms of this upside, and be really careful. This is being pressed a little bit here to the upside. I personally, I don't think this is a trend change, but that's my opinion. And you trade you trade what price is telling you. You got the 200 up here. This is a big deal, and this trend line is a huge deal. And I'll show it to you right now. Um, this is coming off all the way off the contract high. Okay, and look at the reaction we got at each run up. Tapped it, rolled, tapped it, rolled, and we're going back to it. And this is coming in and around 4140. So my point, so to speak, and obviously this number will come down as we expand, as we trade through the rest of December, and that's maybe where we're headed. The 200 up in here, it's going to look all good on the portfolios. Everybody's going to be a little happier, but here's the deal. And if history means has proven anything in terms of trading futures, are there's a huge gap from about the settlement all the way down here at 46, 47.60, all the way up here to, I believe they opened up around 40. I think they opened around 48.90, and they might have got as low as 75. So there's over 100 points of gap that is going to be filled at some point. So I believe we're topping out. I believe we're marking it up, and I would be looking for a little exhaustion up around in this area between the 200, just around 40.35. It's going to meander, and this trend line. This, I think, is a big deal up in here. I don't know. I don't listen. Sometimes things get crazy. I don't think this is a trend change. I just think this is a bear market rally. I mean, it's vicious in nature, and there's been no pullbacks, and that's a little bit concerning. Considering what is possibly coming out in the first quarter next year. In terms of where these companies are going to stand with all these layoffs and all these prices, and there's still inflation's going on. I think sometimes that's what I don't. It kind of surprises me because I keep reading how they're targeting 2% inflation, and we're sitting at 7.7. And that number, although it was better, wasn't exactly a game changer. I mean, for what it's worth, they've made a handful of interest rate hikes. Sooner or later, you're going to show some type of response to that, and that's what that number was last week. Was it the beginning of something? I don't know, but it wasn't as great as it seems to be. But that's my opinion, And you know what? You know what they say about opinions. So, in any case, you trade the facts, and remember that between 39.70 and 38.70, or actually 38.70 all the way down to 37.70 is a gap. That's a lot of gap. And this market is going to probably test these highs, maybe close them somewhere into the end of the year, and we're probably going to roll unless they fade sooner. I don't know. You want to pay attention. I just think that you're limited on the upside, and I think there's still good potential to the downside. So I still think we're in a bear market, but once again, trade what you see, trade what you get, and look for confirmation. You got all these resistance points up here at 40.40 and all the way up here. These are going to come into play. I think you're going to consolidate up here. So pay attention to your resistance levels. And if you get any failure, you're going to want to fade these rallies up in here. So, pay attention to it. There's still great opportunities. I think there's going to be a little consolidation, and we're just going to have to see how this finishes out the rest of the year. All right, guys, there's your morning update. My name is Michael. MR Strategies are my videos. And that's my input for today. Have a great session, guys. Good luck.